Good morning, YouTubers. T-Square with T-Square Talk. Hope everybody's having a great day. It is Wednesday. It's hump day, middle of the week. For those of you guys ready for the weekend already, we still got a couple days. But it is the middle of the week, and I got a great video planned out for you, I think, today. Today, I want to talk about a couple of comments, actually, that I have received over the last couple of days. I've had a few people ask me my thoughts on investing your 401k in gold and silver. So I kind of want to talk a little bit about that, my thoughts on it. Now, obviously, everybody's going to have difference of opinions on this subject. It's got pros and cons to it. We're going to talk about some of that today. If you've got a 401k, you know, the people that do invest their 401k in gold or silver, like I said, I actually know a couple people. There's one member that I know for sure on the channel that he does invest his 401k. He did put his retirement all in silver, and it's paid off for him. It's up. He also stacks silver on the side. So he's got some physical, he's got some in his IRA, which is not physical. And he is basically, if the price goes up, he does really well. If the price goes down, well, obviously he loses. But we're going to talk a little bit about that today. If you enjoyed today's video, hit that thumbs up button. It's something that a few people have requested. Now, I have to also say this is not by any means financial advice. If you have a 401k, it's probably recommended you consult a professional financial advisor that will charge you for his words and has a practicing license. However, I don't always think the licensed people know best. I hate to say that. That's just my personal opinion. And what we're going to talk about is just going to give you some stuff to think about today, and should not be considered as financial advice. So we're going to go over all the stuff. We're also going to take a quick look at the prices on precious metals. Is the dip pretty much over? We're back above 38 and working our way higher. A lot of people did take advantage of this opportunity over the last... I'll say there was opportunity in the last month to pick up some good deals. 36.50 less than a month ago, July 25th, I think. Let's see, July 31st. You had an opportunity where you could have picked it up at 36.50. Some people did pick up a lot. I've actually just got in a bunch of packages that I've kind of fell behind. I'll be doing a short video tomorrow showing them packages. A couple of them were from members, and I still haven't gotten to open them yet. And some of them were from different companies and different places that I put in orders because, you know, when the price is dipping, that's when I want to buy. Some people say, no, I want a dollar cost average. When the price is going up, I don't want to put extra money into it. I want to put my money on other stuff. I am trying to remodel a house right now so that way I can move. So it has been a little, I'll say costly. But when the price dipped down 36 and change, I had to take advantage of that. I actually did most of my buying, though, around 37. I didn't really catch anything at 36 and change, but that's okay. 37 is good when we're now over 38, and I believe we'll be over 39 pretty soon. So we're going to be talking about that too. Okay, so right off the bat, silver price trading at $38.11. We are making our climb back up. Hopefully, we'll see how that goes as the upcoming days continue. Gold currently at $33.50. Looking really good compared to how low it got down to. It actually got down to $32.60 roughly. We've seen that about the same time period as silver took the hit. Now, did we go a whole lot higher? Yeah, we got up to 3,400, and then we dipped back down again. Now, a lot of this recent, I'm going to say volatility in gold, a lot of it had to do with I guess the call of sanctions, the misinformation, or someone made a statement, a high up made a statement about basically kilo and I think it was kilo bars and 100-ounce bars or something basically fell under a 39% tariff. And then Trump basically rebutting that and saying that's not true. Gold is not going to be sanctioned. But during that time period, a lot of people got scared. A lot of short positions had to essentially liquidate their short positions because, hey, they were freaking out. And gold was pretty volatile for a little while. The physical and the spot and the overseas markets were all over the board. One company I actually looked up basically crossed the sale of all of their items as sold out. Every gold coin they had on their website, they marked sold out on Sunday and Sunday night going into the weekend. So I was later able to, once things opened back up and people came out and said, now that's misinformation, then all of a sudden you had opportunity to pick up some deals. So who knows? We'll see how this is going to play out. Honestly, I can't picture them on any reason tariffing gold. Because gold, he who has the gold makes the rules. We want to get all the gold in the country we can, whether it's in your hands, my hands, the government's hands, anybody's hands. Get the gold in the country, and we'll have a stronger, healthier country. So moving on to a quick look at Bitcoin price. Bitcoin trading at $119,400. So Bitcoin doing a great job holding its ground. US DXY trading at 98.2, starting to fizzle down a little bit. Obviously, as that comes down, we see the prices of silver and gold start working their way up again. I expect that we will continue to see this slowly dip little by little. So, and last but not least, the US debt clock trading sitting at 37 and a quarter trillion essentially. So today's topic, like I said, I wanted to talk a little bit about 401Ks. And first of all, before I give my opinion, I wanted to read a little bit of stuff for you guys. Some of it I knew, some of it I didn't know, and you can never really go wrong when you just comb the internet and get some answers. So I just asked a basic question. Is it wise to invest your 401k in gold and silver? Now, there's going to be pros and cons, obviously, to everything. So we're going to read through this and talk a little bit about it as we do. While some investors consider including precious metals like gold and silver in their 401k as a diverse strategy, it is essential to understand potential benefits and drawbacks before making such a move. Potential advantages of investing your 401k in gold and silver. So it is diversification. And I would agree with this pretty much 100%, because if you're diversified and the stock market just totally tanks, they will tell you that gold and silver will start to skyrocket. That's why most financial advisors will tell you you should have 5% of your wealth in precious metals. Now, I've always said 5% is a lowball number. I would actually, I'm probably extremely heavy in precious metals compared to any other investment class, only because I'm going for the home run. I'm going for the grand slam. When things are going good, I don't want to tie. I don't want to push. I want a win, and I want it to be a big win. When my ship comes in, and I believe precious metals will have its day. May not be today, may not be tomorrow, but I would almost bet anything. We've seen it happen before, and we haven't seen it really happen in a while. So with that being said, when the next one comes, I want to have that home run hit. I believe it's going to happen probably within the next 5 or 10 years. I think we will have astronomical changes in the price, to the point where you will be lucky probably to even be able to get some. Gold, I think, will be outpriced for most people. Silver will be essentially priced like it was the new gold. And that's really where I see a lot of this going. You know, the silver market, $200-$300 is not unreasonable in my opinion. And gold going up astronomically to outprice. I mean, it already outpriced itself for a lot of people. A lot of people can't afford $3,600 for a 1 ounce gold coin. And so they move over to silver. Well, at a certain point, I think it will be the governments of the world that will be trying to get all the gold they can get, as they are already. But as the price goes up higher and higher, who's going to be able to afford to buy it? Now, does that mean you won't be able to sell your gold? No, I don't think it means that. I think it means that stronger hands will consolidate more and more of the world's gold. And everyday people like us will be moving in more to silver at higher and higher prices. Precious metals like gold and silver tend to have low correlation with traditional asset classes like stocks, bonds, meaning their prices can move independently. This can help diversify a portfolio and potentially reduce overall risk, according to Sprott ETFs. Now, here's the thing. I agree with that. ETFs, we're going to talk a little bit about that here in a minute as we continue on through here. But ETFs are just paper gold. For those of you that don't know, it exposes you to the paper price. You are not going to have physical if you're an ETF, but we're going to get there. An inflation hedge. Precious metals are often seen as a hedge against inflation, as they tend to hold their value during periods of rising prices when the purchasing power of your paper fiat currency may start to go down. Now, here's the thing. When inflation is happening, generally your paper currency is losing value. There's no way around that. So when they say may decrease, if you are experiencing inflation, it's not maybe it will decrease. It usually does decrease almost every time. It's pretty safe to say. A safe haven asset. During times of economic uncertainty, geopolitical turmoil, investors often turn to gold and silver as a safe haven asset. So when countries get more entangled in world events, world wars, this type of stuff, they've got to print more money. As they print more money, inflation starts ramping up. When inflation starts ramping up, prices go up, and gold and silver tend to go up. So you're actually seeing the value of your gold and silver going up in the form of fiat dollars. Now, some people will make the argument, oh no, the price of your gold, the price of your silver, it didn't really go up. It just pretty well hedged yourself, essentially, because as gold and silver went up, so did a dozen eggs, so did coffee, so did lumber, so did everything. And so, I mean, they're right in that aspect. However, you have to understand the people that are not invested in precious metals are taking huge hits. And here's the thing. If the majority of the world is taking a hit and I am going up or maintaining, then I'm happy with my position in that case because it puts me in a better spot. It kind of elevates me a little bit. Potential disadvantages of investing your 401k in gold and silver. And disadvantages. IRS regulations. Directly owning physical gold and silver in a traditional 401k is generally not permitted by the IRS, and that's generally, it's not always, there are a few exceptions to that rule, though, I have to say, which classifies them as collectibles. So IRS does not view gold and silver, they view it more as a collectible. To invest in physical precious metals within a retirement account, you typically need a rollover to roll over your 401k into a self-directed precious metals IRA. I've never really been a fan of I've never been a fan of IRAs. I hate to say that. I've never been a fan of 401K's, IRAs. I know some people will disagree with this. There's some great advantages. I actually know a girl that she cast out hers a little while back and got a huge chunk of money that came into her. She had to pay taxes on it. But you know what? She would have had to pay taxes on that money if she didn't put it in. They would have given it to her. They would have taxed it. And sometimes IRAs give you a nice write-off or deduction at the end of the year, essentially. So a lot of people do take full advantage of the IRA investing. A lack of income generation. So, here's the thing. If you've got some gold and your gold goes up in value, it doesn't generally mean you have more income. Yes, your investment has gone up in value, but in a lot of cases, when it comes to 401ks, you can't sell it without taking huge penalties, and a lot of people don't want to get rid of it. I actually know people that have Bitcoin right now, and I know people that have gold, and they have no intention on selling. Because they just say, no, they're both going to keep going up in value, and I don't want to sell it. I'll be honest, I have one relative of mine that he tells me he doesn't have a ton. He would rather borrow the money from the bank that he needs for something than give up his coin collection. And I told him, you realize you could sell your coin collection and not have to pay any interest. You did exactly what it was meant to. It built up value. You sell it. You can buy the item you want. and start taking the money that you would make your payments and essentially just start buying the coins back little by little. He goes, and they'll all be more expensive. And if the dollar does collapse, well, so won't the cost of that loan. And my gold and silver will go up in value. So he refuses to give his up. So yeah, it is a lack of income generation, that's for sure. Storage costs, security concerns. So anytime you have any kind of investment in your presence, I guess you could say, that you're the custody holder of, yeah, there's going to be security concerns. Storage cost, unless you're public, unless you're telling everybody that you invest in this stuff, I don't really know if you have a huge storage cost, unless you've just got a bunch. Yeah, if you're investing, a huge 401k and you've got like $100,000 or some crazy amount of money in it, then yeah, I mean, you can have some security risks, concerns, storage costs, whatever the case may be. If you opt in physical gold, you have them risks. You need to consider secure storage, potential insurance costs. I don't even know 100% if the average person can take an insurance policy out on that. I'm just not sure of. I wouldn't trust that because I don't want to list out anything that I have anyway. However, most people, when they invest their 401k in precious metals, they don't hold the physical. What they hold is an IOU, and it's usually on paper. And they're only exposed to the paper. And even when the day comes that they decide to sell it, they can't take physical gold or physical silver. And the reason I know that is, like I said, one member in the our community here on T-Square Talk, I actually know that he has monster boxes in his 401k retirement. And for a while, and he knows what boxes he has. He might have like a box of 1985 Eagles, 86 Eagles, 87 Eagles. And there was a time a while back where they actually traded him, because he had told me the story that they had traded him, I think, 3 boxes of Eagles for 4 boxes of other stuff. So he basically went up 500 ounces of silver, but he didn't have the Eagles at that point. He ended up getting, I think, Maple Leafs, some Philharmonics or something like that, and a couple of boxes of generic 1-ounce silver rounds. Still, it's silver. Silver is silver. You can usually get spot price at any point if he decides to sell them, because the reason we know you can't get the physical is because I asked him. I said, hey, when you start to collect on that, can I give you the cash and you give me your ounces? And he said it doesn't really work like that. They just give me a check every month or whatever the case may be whenever I sell some. So it's like, they sell what he needs to sell, and they start doling him out the money. That's assuming they even have it. I mean, I believe they have it, but there's always going to be that risk of, are they actually holding my physical precious metals? Volatility. Now, this is kind of a joke to me, this one, but we're going to read it anyway. While gold is often considered a stable asset and can still have price fluctuations significantly due to factors like economic indicators, geopolitical tensions, investor sentiment. Silver in particular can move even more volatile. So yes, I agree it can move volatile, but if you're putting it in a retirement, are you really worried about it in short term? No. Tax implications. In the United States, gold is taxed as a collectible with a 28% capital gains rate, potentially higher than the maximum 20% for stocks. So yeah, that obviously, they don't want you investing in gold and silver, so they do put a higher tax on it. That's why a lot of people will end up just buying a couple physical coins, put them away, and then everything is not being held, I guess you could say, by something. It's not part of a retirement. It's not part of anything. Now, they're still obligated to pay capital gains. I know a question that always has came up. If I buy gold Eagles or silver Eagles, do I have to pay the tax? So here's the thing. Just because someone doesn't report it does not mean that you don't have to pay it. There's a big difference there. When you go to sell a small amount of gold or silver, technically they don't report it if it doesn't exceed like $10,000 or whatever the numbers are. However, that doesn't mean you don't have to report it. If they give you a check, you go deposit that check, questions come up, and you say, I sold my gold coin collection, technically you're supposed to pay capital gains. If you buy an asset for whatever price, we'll say X, then you sell the asset for X plus 20%, technically that 20% does get taxed. It is a profit, but I understand not everybody does it. A lot of people will leave a comment right now saying F that or whatever the case may be. Each person is going to have to make their own mind up on that. I can tell you from a couple people that I know that made some mistakes, I guess you could say. You don't want to make mistakes with them people. They will hunt you down, and who knows? I've seen one person's accounts all get frozen for a couple of weeks at a business. He said he was having a hard time paying employees. He was having a hard time paying bills. He got to the point where basically any money that came in, he had to not deposit it into any accounts that were affiliated with him because of that. So yeah, there's some issues. Let's see, alternatives for gaining exposure to precious metals. Now, this I really like. I'm assuming they're going to say the same things that I already knew. Gold and silver ETF exchange. So that is one. And, okay, mining stocks. That's the one that I was actually thinking about, too. So like I said earlier, if you get ETFs, you don't actually own physical silver. If you buy an ETF for, we'll just say 1,000 ounces of silver, and silver goes up $1 from when you got it to when you sell it, you are exposed with $1,000 profit. At no point can you say, I want my silver. Physically, it doesn't work that way. And if you are able to get it, there's going to be fees that come across with it. Mining stocks. So mining stocks is very popular. A lot of people in this community do buy mining stocks. I personally don't buy mining stocks as of right now. Do I always think they're a bad investment? No. I think mining stocks have a lot of potential. I think you can make a lot of money at them, especially if you follow it. I just am really at my age trying to limit counterparty risk. For those of you that don't know what counterparty risk is, if someone's storing my silver or gold and I don't really know they're holding it like they say they are, or mining stocks, are they seeding their mine? They've made multiple episodes of different TV shows where people were going out there and seeding mines. Now, for those of you that don't know what that is, that basically means when you send your sample in to figure out how much gold is in the sample, they purposely put small traces of gold or silver in there. That way it comes back a little higher. Maybe they throw a little nugget in there, who knows? And then all of a sudden they start feeling more confident, like, oh, this has good potential, we're going to have big profits. And does it really? And here's another thing. Whenever you've got something like stocks, obviously there's always going to be potential for manipulation. Now, someone can make the same argument. They can manipulate physical. Yes, they can. They can manipulate mining. Yes, they can. They can manipulate pretty much anything they want. Let's see. Just kind of reading through as I go on. Investing in companies that mine gold and silver can provide indirect exposure, but performance can be affected by factors beyond the metal price, such as opportunity risk and company management decisions. Yeah, so if you get a company that's making a lot of bad decisions, it doesn't mean that it's going to go up just because gold and silver goes up. And actually we've seen in the past where gold and silver had huge gains and the mining stocks just didn't quite perform the way they were supposed to. And a lot of people in the community got frustrated for a while. I want to read this conclusion at the end. Whether you're investing your 401k in precious metals is wise depends on your individual circumstances, risk tolerance, and investment goals. It's critical to understand both potential benefits and drawbacks, including restrictions and additional steps involved in using a 401k to invest physical gold and silver, many financial advisors recommend a certain amount of gold into your investments. Usually it's between 5% and 20%. I can't say I've ever heard a financial advisor say 20%. I've heard 5% and 10% when I've talked to them, as a way to protect or enhance your portfolio diversification and hedge against inflation. I know when inflation was getting really bad, a lot of people were complaining, oh, some kind of hedge against inflation. Gold, silver, it's not going up. Yeah, gold and silver was a little late to the game going up this past when inflation started. But then we did see it catch up. And I believe we will continue to see gold and silver go up as inflation has not gone away. It still has a lot of essentially potential. And that's why we've seen such huge jumps recently in the price of gold and silver. Let's just take a look at silver year to date. I mean, silver at the beginning of the year was under $30, and now we're at 38. That clearly is a good sign of what's going on. Over the last year, we'll say a full year, we were down to $27. We go out 5 years ago, and we've seen it as low as $17. And so once you look at that, $17 silver, we technically even went lower than that, but it was a total fluke. It was during the whole cough, where basically the whole market seized up. We've seen just silver just outright plunge down to like $11. And the same thing can be said with gold. When you look at gold, year to date on gold, gold was $26.50 at the beginning of the year. Now here we are at $33.50, continuing to climb. Taking a quick look at the 5-year chart on gold, though, you could have bought in gold at $1,600 in 22. So, I mean, there was a lot of opportunities to see the rise. Now, here's the thing. When you zoom out, people are always going to complain, I guess you can say, about how, in 1980, somebody bought gold at $800, and it took all the way to 2009 before they got their money back. Well, yeah, but the truth of the matter is they should have been dollar cost averaging. Whether you're investing in stocks, commodities, anything, dollar cost averaging typically has always been proven to get you the best bang for your buck. And the reason dollar cost averaging always works is because prices always generally go up over time. Maybe not in the short run, but in the long run, you usually see, huge price gains just because prices go up. We print money, inflation, we debase the currency, a lot of different factors, but generally everything goes up in price. And then again in 2011, when gold shot all the way up to almost $2,000 in 2011, and it was never really fully recovered until 2020. So if you bought at that peak, but you had a lot of opportunity to pick up during that dip, and some people stayed purchasing, and that's it. They just kept buying, dollar cost averaging down. Now, what was really interesting, though, when it did get up over $2,000 again, it didn't take that long before it hit $2,300, $2,400, and just kept going and going and going. And I really think we're going to continue to see prices escalate on both gold and silver. Personally, back to my original talk, what are my opinions on it? If I had to give my personal opinion, I've given you all the financial information that I know, that I've been able to read, but like I said, it's not financial. It's just I was reading you what mainstream says. My personal opinion, I want physical. I don't want a retirement where I have to keep it in there until I'm whatever age. We spend too much of our lives going to school, getting indoctrinated, programmed, and then we spend the majority of our life running through the steps of working and just contributing, producing. Some people never even get to consume. Why? Because by the time they plan on spending their retirement, they say, well, I'm going to retire at 70 or whatever it's at now. By the time they hit that age, they are no longer either able to do it or even alive to do it. And so that's why I would rather just invest in stuff that I can potentially increase my quality of life. And if I need it before 70, I'm not going to take some huge penalty hit to get rid of it. Yes, I'll pay taxes on anything that I make a profit on, because that is the legal thing that everybody does and has to say, to not get in trouble. However, some people, like I said, they just don't want to be involved. Here's the thing. I mean, I'm not saying this in any negative way, but if someone needs a little bit of money because they just had some crazy emergency just come up, their car broke down and they need, a few $100, you have no options if it's in a 401k to take that out. However, you could give it to a friend, borrow some money against it, and then say, you know what, you just give it back to me when I give you your money back in a month or 2 months or whatever. So I've seen that happen more often than you can count. I think I've seen it happen more times than I've posted videos on here, because people recognize that as money. I have loaned my son. Yes, I treat my son like an adult. I've loaned my son money against some of his coins in the past, and he's always paid me back. I try to teach him the way the real world works. I'll do whatever I can to help him out. But ultimately, when you raise a child, you're basically raising a man or a woman that will be able to do things for themselves. And, I know some people that are like, oh, why wouldn't you just give it to them? That's not really how life works in general. Does it sound a little strange to some people out there that always give their kids everything? It may. It's not meant to be negative. He has a very good business mind because of the way I've treated him. I'll be honest, I grew up in a family that my dad did not cut me any slack. He taught me the hard way, and I didn't always like it, and I don't always feel that I got the fair end of the deal, but I definitely learned the lessons. And, that's kind of the way I'm trying to teach him to a certain point. I love him to death, but on the flip side, I want him to learn what's going on. And one of the best pieces of advice, not financial advice, that I could give people here on the channel: teach your kids about precious metals. Teach your grandkids about precious metals. They might hear, yeah, you're a weirdo buying up precious metals like it's going to go up, or they might maybe say some jokes to you about it. But at the end of the day, I believe they're going to understand down the road. They're going to figure it out. People that have their money in precious metals have done very, very well over the years. And essentially, they are their own bank. That's the difference. They don't always need the bank because, they are prepared. They have true wealth the way it was meant to be, not in the form of paper. So with that being said, that's going to wrap up today's video. And I have to say again, because I have to say this is not financial advice, nor should it be considered as such. This is just my opinions. And we did read what the Google AI said. So maybe you might be able to consider theirs financial advice. But I don't want anybody thinking what I say is financial advice. You can either take it or leave it. Listen to it. Definitely something to give you some thought and something to think about. So thank you all for watching. I hope this answered a lot of y'all's questions on that. And I hope you all enjoyed the video and hit the thumbs up. It went a little longer than normal, so I apologize. Check out some of these other great videos. And if you have a suggestion for a video, go ahead and leave a comment. Doesn't necessarily mean I'll be able to do it. If I'm not equipped to talk about it, I'm probably not going to talk about it. But I might still do a quick video and give my opinion on it. So there's no harm in saying I'd like to see a video on this topic, whatever it may be. Thank you all for watching. I hope you enjoyed the video, and I'll see you guys again tomorrow. Have a great Wednesday, everybody. Bye-bye.